What's up, guys? Give me 1 second. Let me make sure that everything is set up right. Okay. I'm looking for this quick gold trade. Give me 1 second. Geez, how many more? We have 5 seconds. Just 1 second. I'm looking to enter this. God, where are my charts? One moment. Okay. Let me record this thing. I'm observing this entry. So this is what I was waiting for. Okay. So personally, I'm in this trade. I know I didn't give you guys like but anyway, I'm in with 0.75% risk. And I don't know, I'm trying too many things here. Okay. All right. Good morning, guys. Today is Friday, October 6th. And as usual, going over analysis for US 30, gold, and EU. So starting with the daily bias, my daily bias for US 30 is still bearish. Daily bias for gold is bearish as well, because the last daily closure of an SAR was bearish right there. Daily bias of EU is bearish. The US dollar daily bias is bullish as well. So this is the only trade. So this is what I was waiting for. So this trade in 0.75% risk, 30 pips stop loss, 60 pips TP. Once you get to a 1:1 risk to reward, go ahead and set break even. The idea, so there's nothing on US 30 that I'm seeing right now. So, I mean, this, depending on how you look at it, this was I'd marked it up as a triple SAR, but this can be a double SAR right here. But this would be a test and rejection. The candle that's currently going right now is the rejection candle. But nothing for US 30. EU, nothing really. So I sent in trade this morning in the trade ideas. I sent this trade for, this was before the trades validated, right? Gold, there was a possible break and continuation in the hourly time frame. If you look at gold, unfortunately did not validate because price just kept closing and opening in between the SARs. So gold is currently in profit, so monitor the current gold trade, and I'll go over the setup for this one, but I'd also sent that in the Discord. But anyway, going back to the Discord as well. So this did not validate because price kept closing in between. That's on the hourly. EU validated, test and rejection, clear, right? Some of these things, once you start looking at them, so EU right here, if I run the replay here, so you have this zone that's a triple SAR. So if price is coming from the bottom and your sell zone is at the top, what entry are you likely to get? You're likely to get a test and rejection. So you just wait for an hourly candle to touch that zone. So there you go. That's your test candle. So you want the next candle to also close below that zone, because that would make it the rejection candle. Guess the rejection candle attempted to close above, but closed literally below. So this is that perfect entry, because you get to trade next to those SARs, and gold is dropping. So we are almost at a almost at a 1:1 maybe for this trade. So this is the gold sell that I'm in with a 0.75, and I'd send this in the Discord as well. I'd say that I'm looking for this gold trade. So make sure you're securing profit. Let me see where I'm at. I'm actually in 2 gold sells. I took a sell at the top here, but when I get to gold, I'll analyze. I'm just making sure that, because my charts have been freezing this morning. Okay, let me finish. Today was just a good day in the markets. Okay, so here you have your test candle, you have your rejection candle. At that point, and I told you guys, with this FX pairs, they will give you, and especially when the entry is next to the SARs, they will give you that nice entry next to your SAR levels. So at this point, this was an entry for me. I was waiting on gold, so I really wasn't looking to trade, and gold is dropping, man. My charts are frozen, but gold is sinking. Go ahead. Wait, give me. I know I'm flopping around, but I want to make sure you guys set break even on this. So this trade should be at break even, has already achieved 1:1 risk to reward. Go ahead and set break even. So I'm at break even. I'm actually up like 7. Oh, I forgot to turn on the camera to see if I have this. I'm up like 7K. Because I also took another gold trade up there. So go ahead and set break even on that trade. So hopefully we get a nice, yesterday, unfortunately, the gold trade we were in hit break even. So if we win this, we'll be up 1.5% for the day. Oh, this is nice. What is so EU right here? You go ahead and enter this trade. I know NFP was if it wasn't NFP, I would have entered the EU as well, but I really wanted to focus on gold. So here you can see the trade started off in drawdown, right? But this is the nice thing about that entry. For this entry, there was no business for you to go down to the 1 minute because the entry was right next to the SARs. So look at what happened during NFP. Sank all the way back down. And with this one, that's the key, right? Make sure you're following your daily bias. You don't have to use the SARs, but make sure you're following that daily bias. And gold is retracing back up slightly. So make sure if you want, it's Friday, you can secure profits. For me, I'll keep holding. Yeah, so that was the EU trade on the hourly. So for this gold, nothing validated. So gold right now on the hourly time frame, nothing as well is validating. The only entry we can possibly get on gold is a test and rejection entry, because you can see this current hourly candle try to break and close above here, but might close in the next 17 minutes below this bottom SAR. But for it to become a test and rejection, remember, you always need 2 candle closures. So if you want to use 1 candle closure, if you can find a strategy that works, well and good. But remember, you need to use 2 candle closures. So nothing I can see on gold right now. So when we go down to the 30-minute, this is when it gets interesting. So make sure you're securing profits, but I still expect personally, I mean, this official trade, there's another sell I entered at the top here. So for me, I mean, 2 sells on gold. If I extend this time frame, I will show you the trades that lined up. Remember, I don't extend the SARs on the 15-minute and on the 30-minute, ideally, because the chart just becomes messy. So starting off at the 30-minute time frame, this zone, you guys see this zone right here? This is the zone that on Tuesday, when we had the live session, on Tuesday, the trades, this is where gold melted from. If I go back, I think it was this day when they gained this momentum, and we were looking for the same trade, this 30-minute zone. We have a triple sell SAR. So on this day, if you guys remember, I'd marked up a sell entry up here, and I was waiting for at least the next 15-minute candle to close. And it's no, that's Wednesday. Let's go to Monday. No, I'm sorry. It was Tuesday around market open. Give me a second. Tuesday around market open, 9:30. Tuesday, 9:30, right here. Because Monday we didn't have a live session, yeah. Tuesday, 9:30. So this was it Tuesday? It was either Tuesday or Wednesday. Maybe Wednesday, because there was a heavy, Wednesday. You see this? It was Wednesday, my bad. Wednesday, 9:30. I'd marked up a sell entry around this zone because we have a triple SAR on the 30-minute time frame. So I was hoping that the next 30-minute candle closed. Actually, on this day, there was an entry on the 15-minute time frame in the same zone and 30-minute. But here, sellers have been coming in heavy. So look at what happened today. Same zone, before NFP, and I sent this in the trade ideas section. Let's replay this, and I can show you guys so that people don't say I'm just finding trades after the fact. So here, gold also has an entry, 30-minute entry. I sent this at, however, I don't know what time this was, 7:03 a.m. So this was that entry, 30-minute time frame. So what do we have here? This zone has acted. This is where the sellers that are going to take gold either to 1800 or 1600. This is where I think those market makers are sitting, because every time gold has come to 1823 zone, there's been some heavy rejection back down. As much as the buyers have been pushing gold up from this area, the sellers have been coming in with heavy volume. So in this instance, this was a break. So remember, break and continuation, those are two candles, two consecutive candles. Break candle, then there's your continuation candle. Again, if you did the setup here, you do your 30 pips TP. So this was that trade I sent before NFP. There was a 15-minute entry as well. So this was a 30-minute entry. Again, you're trading this zone. The SAR zones are like 50% of your entry. That is doable. The only red flag to me was, and gold again is melting down. My charts are literally frozen, but I can see I'm up 6K right now. So that was the entry right there. I didn't enter this trade because ideally of NFP, but I knew I would get trades after NFP, and I knew that I would be watching 1823. So if you entered this one, or if you entered the 15-minute one that will go over, the trade during NFP went straight into profit. Then in the Discord, what did I send? In the general section or trade ideas section, what did I send here? I said break and continuation. So we have a 30-minute double SAR here. So here, if I go ahead, let me delete this to avoid. So this is the trade we are currently in, the official trade that I'm up now 7K, going to 8K. Now, this is a SAR level. Remember, treat SAR levels by, one at a time. Don't try and combine them together. So this on the 30-minute time frame, actually, this trade that we entered was on the 15-minute time frame. So when gold came back up here to this zone, to 1823 zone, let me use this one because it's clearer, 1820-23 zone, gold touched the same 30-minute zone. So, and I'm telling you guys, I'm in 2 gold trades. So I entered a sell at 1823.30. So when gold came up here and touched 1823 here, I entered into a sell. The reason for that is I told you guys here, if you go on the trade ideas section, I said what I'm waiting for, best to wait for after New York Open. So since this is the 15-minute time frame, so let's go down to that 15-minute time frame and make sure you guys are securing profit as the trade goes. Let's see how the trade first is going on. So the TP is at 1816. We had no drawdown on this trade. 1822, TP is at 1816. Going down on the 15-minute time frame, this is that entry that validated. So if I go here, and you can pause me if I'm going so fast. So on the 15-minute time frame, what do we have here? Let me do a replay as well here. So I want you guys to follow with me zone by zone. So 15-minute time frame, let's go each SAR by itself, zone by zone. Okay, so what zone do we have right here on the 15-minute time frame? This is a triple SAR. So this is the same one that I'd sent before NFP. So 1, 2, 3. So forget about all these other zones here. So what entry is this? This is break continuation. This is the entry that I'd sent before NFP. Personally, again, I didn't take it and I didn't send it as an official trade. I sent it as a trade idea. I normally go over with you guys the difference between a trade idea and an official trade. But the key thing for you guys is to learn what a break and continuation is, what a test and rejection is. Forget about whether a trade is official trade, whether a trade is a trade idea. The key thing is that first, make sure you can identify a break and continuation and then start worrying about whether a trade is official or whether a trade is not. So that would have been the trade, or that's the trade that I sent. Okay, let's go back. So we are done with that level. Let's go. Let's keep looking here. There's nothing on the 15-minute. This is on the 30-minute. Okay, on the 15-minute, we have this double SAR. What is this entry? Break, continuation. Guess what? Another trade right here. I don't know what time this was. This was at 7:30 a.m. Break and continuation entry. You do, oh, gold is, I just hit TP on on the sell I took at the top, and I'm actually screen recording all of this, so I'll show you guys after. So right, so just step by step, break, continuation, full TP during NFP. Okay, let's delete that. Let's move to the next zone. Just step by step. This zone is another 15-minute zone. What is this entry? Break of our double SAR zone, continuation. Okay, you line up your entry right there. And this was, I don't know if this was post NFP. This was literally before NFP, so it's not a trade. Knowing myself is if I was trading by myself, I could have taken it, but I wanted to wait before NFP. Remember, the key thing is make sure your stop loss is always above the SARs you're trading. Red flag is when your stop loss is when your entry relative to the SARs you're trading is like if the SARs are like 70% of your stop loss, that is the red flag. But if your SARs are 50% from your entry, that is fine. But again, this was a red flag because of NFP, but I want to get to the trade that we just took right now on the live session. Okay, so hopefully you guys have seen the break and continuation of this zone, break and continuation of this zone. Now, same zone, this zone, I'm sorry, the next zone down. What entry does it give? Break, continuation. The continuation was the NFP candle. Now, the sell that we are in right now is this one. Oh, validated down here. Let me not say is this one because we didn't sell down there. Validated down here. That's the sell that we are in right now. The sell validated down here. So if so this is the sell that we are in right now. It's so make sure you guys are securing. It looks like it came to like 0.2% on my TP. I was up like 8K. So the trade I took at the very top already hit TP. It gave me 6K. So right now, wait, did I set? Wait, my bad. I told you guys to set break even. I didn't set break even on the second trade. Okay. Too much money today. So I just want to, it's just confusing me. Anyway, so for this trade that we entered, right here that just got to like 0.2% in profit. The trade validated here. This is the zone. This is the SAR zone. Break, continuation. Forget about all other zones here. If you want, you can always delete them. For me, I'm able to mentally filter those zones out. So for this zone, break, continuation. The NFP candle is the one that gave you the continuation candle. So what is a red flag? As much as the trade validated down here, and you can see I have this one, I have a trade validated down here, but price was overextended. Wait for an entry on the 1 minute or 5 minute time frames when price retraces to the SAR zone. Now, what's a red flag of entering the trade here? Remember, I always tell you guys, whatever it is, after you've identified your break and continuation or test and rejection, make sure that your stop loss is above the SARs you're trading. That is the first thing. Like after a trade validates, mark the trade up and ask yourself, where is my stop loss? If your stop loss cannot be, above the SARs you're trading, forget about that trade, but wait for a retracement. So in this instance, I actually entered some small buys down here. Remember when I told you guys that my charts were freezing in here and I was like, bro, when the charts freeze and one order gets filled in twice, right? Because I was anticipating gold to retrace back up. And I also mentioned that, let me see if I can catch the dead cat bounce on gold. And then I had a journal. I journaled this like 2 years ago. NFP data, but not every time, but NFP data follows the results, then recovers before New York session. And then during New York session, they then follow the results again. What that means is if NFP is released and price spikes all the way up, before New York session, they will most likely reverse price to pre-NFP levels. Sometimes they'll do that before New York session. Other times they'll do it during New York session. But this is the best case scenario right here. And then during New York session, they then follow the same direction they went. Whether they went bullish or bearish, they then drop or pump up the instrument again. So I had like my two-year ago self, whatever, I almost said 2-year-old self. My 2-year ago self had journaled this. I had this as a confluence. I had my SARs as a confluence. So in this instance, I said, instead of entering this trade here, I lined up this trade at the SARs I'm trading. Okay, so what happened? At this point, I removed the extensions on my SARs because remember, if I'm going down to the 1 minute or 5 minute timeframes, I do not want my SARs extended because the charts get too messy. Okay, so price came back up. Now, if anybody entered on impulse here, sure, you could have gotten like 10 pips profit, but I was actually tempted to enter in on impulse, but I realized they can manipulate this before New York open and push price all the way up. and which is what they did. So when price came here, and this is, again, let me go back to that 30-minute time frame. This zone, sellers, and I'm almost sure gold is going to go to 1800. I'm almost too sure also it's going to go down to, at the very least, 1700 or 16, if not 1600. If you look at the daily time frame, there's a huge structure, possibly to the bottom. So when gold got here for me, I entered in on impulse at 1823, because I already knew 1823 was a huge area where these institutions are putting in sell orders. So my first sell order was right here, and I told you guys I'm screen recording this on my phone, so I'll post it for you guys. Took the trade here, 30 pips stop loss, 60 pips TP. And this is the difference. When I'm not trading on the live session with you guys, sometimes I do enter in on impulse, but because I know where I can exit and I know how to manage my positions. So I entered in here. I was using risking 1.5% of my account value. And then the trade validated this second trade that we just entered. So that was my first position. Then I went down to the 1 minute, like literally before the live session started. I was waiting here. So you remember I told you guys, wait for, what is it called? Go down to the 1 minute. So we already had an entry on the 15-minute, but price was so overextended down below and you'd automatically get faked out. So what you do, wait down on the 15, on the 1 minute or 5 minute timeframes, wait for a live SAR to be formed, and then wait for an entry on that live SAR. So if you're looking for a sell, and you're trading a live SAR, what entry would you find? You would find a break and continuation entry. So at this point, I was already in my that impulse trade right here at the top. And then here, I just started the live session with you guys. And today I didn't even say hi. I was like, hey, we got to get into this trade. And you can see for this trade, I almost got stopped out of it, but price came back down. Those are the sellers. I was waiting for them to kick in. At this point, the sellers kicked in. And guess what formed? We had a live 1 minute SAR candle. I'm sorry, live 1 minute SAR, sell SAR being formed. Okay, so what was I expecting here? In order for me to sell, remember, for me, it's almost always, I know I just entered the trade on impulse, but that was when I was trading alone. But if I'm trading live with you guys, and if you want to be consistent and you want to avoid FOMO, always wait for those confirmations. Unless you know how to manage a trade if you're entering on impulse. So here we had that live SAR that formed. Here, what I was waiting for was a break and continuation. So 2 consecutive candles that close below this zone. And look at what happened. That's the first candle. That's the break candle. So for me to enter this trade, and this was on the live session, I needed another 1 minute candle after this, the immediate candle after this. If the immediate candle after this closed above that live SAR, I would not have taken that sell. So what did the next candle do? It closed below that zone. That's the moment I said, I'm selling. I know it happened quickly, but I said I'm selling gold with a 0.75% risk, 30 pips TP, 60 pips stop loss. And look at that, barely any drawdown. And I don't know where looking at my phone, I'm in profit. So at this point, you've already achieved a 1:1. So that's the point I told you guys to go ahead and set break even on that trade. And the trade came, missed almost, I don't know if it hit TP for you guys, but for me, I'm still in the trade. So it came to like 0.1 pips of TP and retrace back up. Personally, I'm still in this trade. Whatever happens, happens. But depending on slippage, you either hit TP or you're still in the trade with me. But it's Friday, so make sure you secure. For me, I already secured 6K on the top trade. So if this trade hits break even for me, I really don't care. The risk to reward is still in my favor. But that is how you analyze. So I know going down, like when to go down to the 1 minute and 5 minute can be tricky, but what I would say, make sure just master the entries on the 1 hour timeframes. You can see the EU entry on the 1 hour. That was clean. Make sure you're mastering the entries first on the 4 hour timeframes, on the 1 hour timeframes. What you'll find is that the entries on the 1 hour, the entries on the 4 hour do not come up often, right? So what then, after you've mastered those, so like every day in the morning, when I start analyzing my charts, I find, do I have any entry on the 4 hour? Do I have any entry on the 1 hour? Even with my EA right here, you guys can see that I've only been doing sales only. if I go to trade history right here, I do not trade both directions. I'm not that kind of trader, because every time that I was trading both directions, I was FOMOing, I was getting trapped into trades. But if I go, I don't know how you history. If you look at this history, I've just been selling gold on the EA by itself. If I go to the second page, the third page, just been selling gold. As of today, as of right now, 6% return. Max drawdown is like 0.88%. And the key thing, this is my cheat sheet right here. So this is always what I will always use to find my daily bias. I do, even today, I know I told you guys before news, you can always check the crosses indicator and see what signal was there last. So today, the last signal on the crosses indicator was a buy. If I go to the crosses indicator, the last signal before news was and that trade got taken out at break even. So I'm hoping you guys secured some profits at the very least. But the last signal was a buy on US 30, but US 30 dipped. But the last signal on gold was a sell. So for me here, daily bias is always king. I don't trade using signals. I just, I've found that the SAR, the daily bias is king for me. So with the crosses indicator, the last signal before the NFP news was a sell. So for me, instead of trying to catch a buy on US 30, I would have actually found an entry on gold. Because remember, if I'm trading, I would be so mad at myself if I would be so mad at myself if I just took a trade and ignored my daily bias. So if I had taken the buy on US 30 and it lost, I would have been so mad at myself, because I would have been like, hey, you always say you need to follow your daily bias. Look at what happens when you don't follow your daily bias. So long as, or as much as I might tell you guys, sometimes you can use, say, the crosses indicator, look at what signal was there last before news. Make sure the very first thing you're looking at, again, you don't need to use the SARs for your daily bias. It's just what works for me, because for me, since US 30 turned bearish here, I've just been selling. Since gold turned bearish here, I've just been selling gold. I haven't even bought gold at any time. EU here, since it closed bearish, just selling it. So that's the key. I always find my daily bias, and then I look for SAR entries on the 1 hour and 4 hour. If you don't have any entries on the 1 hour and 4 hour timeframes, which you won't have every day, then go down every day to the 30-minute and 15-minute timeframes. Use the same analysis. Nothing changes. Same analysis you do on the 1 hour and 4 hour. Apply that to the 15-minute and 30-minute timeframe. This SAR strategy is probably 2 months or 1 month old. When I first started using it or became consistently profitable with it, wait, give me a second. Consistently profitable with it. I'm trying to see if there's an entry here on US 30, 98. Wait, give me 1 second. When I became consistently profitable with it, I was only trading it on the 1 hour and 4 hour timeframes. But if you guys know Desire, who's normally in this group, he was like, he was killing it on the 15-minute and 30-minute timeframes. Because what happened is, when I was doing it on the 1 hour and 4 hour timeframes, we never really used to find a lot of trades, because remember, 1 hour and 4 hour timeframes do not give you a lot of trades. But we just saw, like on gold, the trades we took today, the 15-minute, the 30-minute timeframes give you like a bunch of trades. But anyway, so for this gold trade, I got taken out at break even, so I'll record it at break even. But for you guys, if you're already up in profit and you are like 0.2 pips away from TP, but I just try to be transparent with you guys. But anyway, so even today, I'll just record today as break even. As much as on my end, I'm up by taking another trade before that. So that's the key thing. Always, at the very least, you should set break even, and then you can think of, okay, maybe I'll take 50% of my profit. Maybe I'll take 10% out. So make sure you're paying yourself along the way. Also, it's Friday, so you don't really want to be risking too much. So right now, I think for me, I am done with gold. It's been a good ride with gold for today. So looking back, if you ask, I would be curious what they're doing on the 30-minute time frame. So remember that 1823 zone, we have some heavy sellers sitting there. So you see the same zone. So if I ask you guys again, what entry is this giving you guys? What is this candle? This is a break. This is a continuation candle. If in the next 25 minutes, this candle, the current 30-minute candle, closes below, that's another entry for a sell on gold. So, but if it closes above, then you have to wait for a break and continuation entry, because if gold closes above this zone and you want to sell gold, then price would be above your level. So you'd then have to wait for a break and continuation entry. Put this as, but anyway, if you guys have any questions, feel free to ask. But you know, I hope at the very least you guys have learned whether to journal, whether it's journaling, whether it's interpreting the 15-minute entries, the 30-minute entries. So this one, I'll just transfer this label here, and then I'll just be patiently waiting to see if this validates as a break and continuation. If it doesn't, then I'll just wait for the next one. And for me, I think I can afford to go back in the markets today because I'm up pretty substantially. But if you haven't traded today, I would just say just wait till observe the same level and wait till Sunday, because what I see them doing, if this is indeed where those market makers are sitting to push gold to the 1800 level, they might not push it today. So keep in mind, the Asian session is closed because the Asian markets just closed and all of that. So if they're supposed to push price to 1800, they might not do it today. So what they might be doing right now is leaving their own pending sell orders here. So you see how there's a fight in this zone. So what they might be doing is pulling orders. So they might pull their sell orders, because I think what's keeping gold price.
It's a holiday Monday.
Oh, it's a holiday Monday as well. Yeah. So Monday, Tuesday, whatever day of the week next week. So what they might be doing right now, they might be pulling their sell limits off, and then, or pending sells off. And then on Tuesday or Monday late night, between now and then, they trend gold all the way up. Not too far, but trended, consolidated. And then Tuesday, guess what would happen when price gets to 1823? It would sink heavy. So if you go back, you know, historically here on the 30-minute time frame, look at every time what happened when gold got to 1823 on the 30-minute time frame. So you see this manipulation right here. This is what I expect between today and Tuesday. So they can push it up, but not too far up. And then when price hits 1823, you have that heavy flash on gold. So if you ask me, I think the sellers are still in control on gold. This buy candles, you can see the buy candles are being wiped out by just one red candle. So we definitely have a lot of selling pressure here. And for me, I'm still going to keep selling gold until we do get same thing that happened like here. We do get a daily closure above that zone. But anyway, let me know if you guys have any questions. I think that will be it for me. If you guys have any questions, what is a break and continuation? What is a test and rejection? I'm happy to go over it again. If you guys have, I know there's been sometimes some confusion on when do you go down to the 1 minute time frame versus when do you go down, or when do you just take the trade on the hourly time frame? I can go over it again. I've gone over it time and time again, but you know, I don't mind going over it again if it means you understand it better. But if you already understand it, then the goal is just make sure, or you guys can talk about what you're struggling with, and we can, you know, we can all chip in. But you know, even for me personally, I still struggle with whether it's FOMO. Like I FOMO in trade sometimes. Sometimes I just feel the edge of trading. So nobody is really like 100%. But the key thing is you just get to a point where you understand your mistakes, and then you learn from them, and then that's it. So I don't see, let me see. I've been looking at Bitcoin lately using the SAR. And I think it's also a good candidate for the SAR strategy, but I just do not know. Anyway, Bitcoin is also a good candidate as well. But the only issue with Bitcoin, like a daily candle can be a $4,000 move. So that's been tricky, but I'll be testing some things on Bitcoin going forward. The other things that I like trading, GBP, GBP NZD. I know we caught GBP NZD, the sell from the top. So here, GBP NZD, we are creating a, let me make sure I have both buys and sells on this one. So GBP NZD, we are creating, we just created a live buy SAR right here. If a daily candle closes above here, this might be a possible buy on GBP NZD, but you'd have to wait for a daily candle to close above that live SAR. Another favorite of mine is odd JPY. Odd JPY been consolidating. Sell bias on odd JPY. I'm still expecting odd JPY to drop to, anyway, I'm just expecting it to drop. It's more of it ranges sometimes. The other one I love is odd CAD. Odd CAD is OddCAD. Okay, there's something I want to check out with OddCAD. So remember when we use this sites right here, these websites that have the market sentiment, and you remember when I told you guys this market sentiment and OddCAD, yeah, it's still there. Using this market sentiment, if you have a lot of, and I learned this from one of my first mentors ever when I first started trading. If you see retail sentiment, like 70% of people are trying to buy, you see like gold, perfect example, 63%, and this is retail traders. This is traders with live accounts with the FX Blue broker. I think IG.com also has it, like even for US 30, same thing here. So here, gold, this is another thing you can use as your daily bias. If like here, 62% of people are trying to buy gold. What my first mentor or the first person I used to follow was like, he would be like, okay, we're just looking for sales on gold, because the idea here is that 90% of retail traders are not good. They're trash. I mean, we're retail traders. I used to be one of those people who just used to be eaten alive by the markets, because you find retail traders having the mentality that if something has gone so high up, there's no way it's going to keep going. Now, if you want to use that mindset, try trading US 30, because when US 30 can break up one direction and it can keep stopping out, so it can break up for a buy and then sellers are going to get liquidated. I'm talking about that because I used to, I have in the past when I used to be a beginner, there's a time I blew like 3 challenges on a Friday, and I hate trading. Actually, even today, I'm still traumatized trading on Fridays, because there's a time I was on a challenge and I think I was on phase 2, almost like literally needed like 1% to pass the URL. I'll put it in the chat. So I was on phase 2, almost past phase 2, blew an account because I was trying to catch a reversal on US 30. Bought another challenge, and then I was like, oh, US 30 has gone up so high, I need to get it back. Guess what? I started phase 1, blew phase 1. Then I was like, okay, US 30 kept pumping up. So and if you guys know me, I used to trade with US 30 100 lots, and that is heavy. Got the 3rd challenge. You know what happened? I blew phase 1 the same way. So, and before then, I never knew about this sentiment. So the idea here is that if you have like I would say above 60% if 60% are trying to sell, look for buys. If 60% are trying to buy, look for sales. Now, it's not going to happen every day. There are times when these buyers will be, so you can have an instrument where 80% are trying to buy, and that instrument is going to buy. But more than likely, because again, how do market makers make money? By stopping, among other things, by stopping out people or retail traders. So you can see here, OddCAD, for the longest time, OddCAD has been like 70% trying to buy, and OddCAD has been selling and selling and selling. So let's look at OddNZD. So OddNZD, 89% of retail traders have been, and let me also put this other link right here. This is the IG link, Cassie. The other one is the IG link, but the IG link gives you sentiment, I think, for US 30. I think if you browse in there, there's sentiment for other things. But the one I just posted here is for US 30. But if you look up IG.com market sentiment, let me look it up here for you and see. But FX Blue has more instruments compared to IG.com. So IG.com market sentiment. IG.com market sentiment. Let's see. No, the other one was daily FX. My bad. Daily FX is the one that has others. So I'll put the daily FX link in there as well in the chat. So you can, depending on what you're looking at. So anyway, so if I go back here, I want us to look at what's happening on ORDENZD. So without even looking, I just looked at this right now. Without even looking, if you ask me, I think what's happening on ORDENZD is selling. It's not buying. Like it's been selling and selling. So here, let's go to ORDENZD. And I might be wrong. Again, remember there are days those buyers, like in this case, they might have their way. So I might go here on ORDENZD and you guys find that ORDENZD is actually through the roof. But anyway, let's just look at what's happening with ORDENZD. If you ask me without even clicking here, I think ORDENZD is selling. There it is. And this is on the daily time frame. So what do you think is happening to all these retail traders that are buying here? 80%, even ODCHF, ORDENZD, 89.5% that are buying. What do you think? Their accounts are getting blown. They're getting margin called. So that was the mentality or the logic behind my mentor or the person I was following teaching me that. So for me, if I was trading ORDENZD right now, dude, I would just be selling and selling. And even right here, just by looking at it, doing technical analysis, I would expect ORDENZD to complete structure. So you guys know that I love looking at structure. So we have this structure to the top, came here. So this structure, I expect ORDENZD to close structure at around 1.06040. So I expect ORDENZD at the, or even push to 1.057. So if you ask me, I think the buyers are going to keep getting stopped out until ORDENZD reaches 1.05740, and maybe there's some redress there. But guess what they can keep pushing it to? This other structure or low right here, 1.047. So some of these things you might, and this is why sometimes and I normally encourage you guys, if you've learned all you can from me, I wouldn't feel bad if you move to another group. Of course I would want you to stay with me, but sometimes after you're done learning something from X person and you're profitable or you find it's not working for you, move to another person, because you will learn different things from different people. Like literally everything I teach you guys here, it's not, most of the things are things I learned from other people, and few things like the SCR that I can say that one I developed by myself. Of course, the SCR strategy has always been there, but the way I trade the SCR strategy, that I didn't learn from anybody else. But when I talk about the crosses, like for example, this crosses entry, this is something I learned from somebody else. This is not something I can say, oh, I 100% develop this logic or whatever. I'm honest with you guys. I'm like, I learned this from somebody else. The sentiment, I did not learn that by myself. I learned that from somebody else. So, if you've learned all you can from me, you can move on to another group and hopefully still stay in touch with us and come back and say, hey, guys, I found this. And that's how, we grow as a community. And that's how I can also help you guys and even develop all these tools and instruments for you guys. But anyway, hopefully that made sense to you. So again, watch for gold. You see that pump right there. So in the next 11 minutes, if in the next 11 minutes, they close this as a bearish candle, gold is going to come back down. But I don't think they will. I think they'll just keep pumping it up till next week. So hopefully you guys got something from today's session. If you guys have any questions or any feedback, let me know. Again, for the EA, just be patient on that. When it's ready, everybody will know. Yeah, this is the other thing I was looking at. Here's another good example, and this is on US30. If you're trading zones, and I see here, let me delete this. Let me mark these zones up again for you guys so that you can see them clearly. Okay, here for US30, this is 15-minute time frame. So this can either be, so remember for the SCR zones for me, the SCRs that are next to each other, because you're looking for anything that's at least a double SCR. For gold and FX pairs, those zones should be no more than 10 pips apart. The distance between the SCRs should be, or let me put it this way, because sometimes you'll have a triple SCRs, quadruple. So the distance between the top SCR and the bottom SCR that you're looking at should not be more than 10 pips. That's for gold, that's for FX pairs. For US30, and that's assuming you're using the logic of like 30 pip stop loss for gold and FX pairs like I do. For US30, personally, I use 50 pip stop loss. So that is to mean I can, sure, if I can get a 10 pip range, that's good for the SARs. But for US30, you can get away with like a 20 pip difference between the SARs. So here I can see this is a possible triple SAR. Now, the distance between the top one is 33,033. The bottom one is 33,015. So that's a 15 pip zone. So you can consider this as a triple SAR zone, or you can consider it as a double SAR zone. If you considered it as a double SAR zone, guess what it would have given you here? A test and rejection entry. But if you considered it as a triple SAR zone, of course, this would not be a test and rejection because you'd have needed these candles to close below this zone. And then I'll show you the zone I'm looking at. Then you have this other zone. So this you can consider as a double SAR. This one, because they're close enough to each other. It's like a 3 pip zone on US30, and that's good. So there's that zone. So you can either be a double or a triple. If you wanted to consider this third one, guess what? It's the distance between the top and the bottom is like 14 pips. So that falls within the 20 pip threshold. So I want you guys, what entry? So forget about this zone at the top here. Let's focus on this zone. What entry do you guys see here? This candle broke. So whether you're considering the double or whether you're considering it a double or triple, it broke either the double or the triple and closed here. So that's a break entry. So we're looking at this zone right here. So that's a break entry. So I normally do this. So as much as I can see it, but I like, when you write it down. So here's another thing. Make sure when you're taking the trade, you write down on the chart, why are you taking this trade? So for me here, I would come here and put my arrows and do, since this is a break and continuation for a sell, I've already saved those templates. So I'd come in here and say, because this is to remind your mind that, okay, this is a break and continuation. Also, you're trading in the direction of bias. So I come in here and say, okay, I got my break candle. So if I replay this is how I would have handled that. So at this point, I would mark up my chart. I put the arrow, I say possible break and continuation because it has not validated. So for this to be a break and continuation, what would I expect for the continuation candle? I need the next 15-minute candle to also close below this zone. What does the next 15-minute candle do? It closes. Now, at this instance, in the last few seconds or few minutes of this 15-minute candle, then I would have started putting on my trade right here to mark up. Okay, personally, I'm doing a 50 so that you know how far it's going to close from your SARs. So here, I would have done this. No, that's too heavy. 500, I added an extra 0. Okay, there it is. So at this point, I would have then started thinking, so in this instance, what's a red flag of this trade? Yes, so at this point when the trade closed, I could have changed this from possible to a break and continuation. So here I ask myself, okay, the trade is valid. What do I want to do? Okay, the reason I'm saying here, the ideal closure of this candle for me would have been somewhere close here, right? Same thing I showed you guys on EU. You ideally want your confirmation candle to close next to your SARs because at that point, you can enter on impulse. So here for US30, for me, here you have a decision to make. The SARs you're trading are like 90% of your stop loss. What can happen here? Sure, you can take the risk. So you have 3 options. Take the risk, take the trade with your normal risk and hope it goes straight to TP. Enter in with half the risk that you would take and then save your other half in case the trade retraces. Or if you're like me in this instance, I would wait for a retracement here. Now, here, what does the next trade do? Go straight down into TP. Now, it's called opportunity cost, right? You guys know opportunity cost is the benefit you forego by taking option B over option A or option A over option B. So in this instance, for somebody who took, and I'm talking about my own experience as Michael, for a trader who took this trade on impulse, and he was aware that, hey, my the SCRs are like 90% of my stop loss, and it went straight to TP, that's good for him. But let's assume that instead of going straight to TP, this trade retraced all the way up, stopped this person up, or stopped this person out. And that has happened to us even on the live session, and then came all the way back down. Now, if I was the kind of person who entered this trade up and let's say it didn't go straight to TP and retraced up and stopped me out, I would be so mad at myself. There are people who are like, okay, they'll take the risk, and if they get stopped out, they don't get mad at themselves. So even for me, I'm normally honest with you guys. Psychology-wise, I'm still working on that. So I know myself as Michael that for me, for this trade setup, as much as the trade was valid here, I would wait for a retracement up here. Now, if the trade goes, so in this instance, if I was waiting for the trade up here, I also know that the trade is still valid. So if at this point, I know that the person who hopped in on impulse, the entry was at a 1:1 for them, guess what I would do? I would just, if I was waiting for the trade up here, I'll just delete this trade because I know the person who took the trade on impulse, they're already at a 1:1. And what do I teach you guys when you're already at a 1:1? Go ahead and set break even. So I really would not wait to re-enter the trade up here because I'm re-entering a trade that somebody else either hit full TP or was stopped out at break even at. So if at this point US30 comes all the way back up here, I would not be expecting to re-enter it because the trade already validated, the trade already hit full TP or already hit break even for folks. But anyway, so that was another thing I just looked at here. So remember, there's always going to be opportunity cost. For this trader who took that trade would have been in full TP, but if the trade reversed, the trader who waited, like the same way I waited for that 15-minute entry on gold, the trader like me who had waited in case of a retracement, I'm going to be in profit. The other person will be stopped out. So you just have to know what is your opportunity cost. Are you willing to risk? Are you willing to wait? Or are you willing to use half risk? But I think that's pretty much it for today. I wouldn't be looking to trade anything else. Gold is still pumping. So again, as expected, it's Friday. So if it's Friday, if you're expecting one thing to happen, maybe expect the opposite to happen. But that's going to be it for me for the day. If you guys have any questions, feel free to ask. But other than that, I can catch you guys next week. Okay. Or is there anybody invest?
Yeah, can you, for gold on the 30-minute and the 15, there's a lot of like green SARs to the top. Well, what does that show like right now?
So let me ask you one thing. What are you looking? Are you looking to buy? Or are you looking to sell? Or are you just
sell, like sell? Yeah.
Okay. So why would you be looking at buys though?
Yeah. So basically, you know how I was testing the indicator. So I was thinking, if you like do, when you do it separately, like when you put the green lines and the red lines. I just wanted to see how it works, like when you do it separately, because like how you said the daily bias is bearish, right? So like if you're bearish, right, on the 15-minute and the 30-minute, there's nothing. But then if you put the like the green lines, there's a lot of green lines to the top.
So ideally what you're saying, and that's, I'm not saying it's wrong. So ideally for you, what you're saying is that, and you're right? The daily bias can be bearish, but then gold is still going to go up. So what you're saying is that what do the green lines show? So it's the same thing, right? So step one, if you are looking for buys and the daily bias is bearish, if that is not going to mess with your psychology, that's fine. For me personally, if I'll delete this. So let me remove this. Okay. So let's assume, and of course, as much as the daily bias is bearish, right, it doesn't mean that something is going to keep tanking. Something can keep going up. So here on gold, you say the 15-minute?
Yeah, and the 30.
15-minute and 30-minute. So 30-minute here. So it's the same. You do the same, how do I put it? The same analysis as you do for sales. You'd mark up your zones. So here you use what this shows you. Look at this. You have in a 30 pip zone, you have all this buy SAR zones. So this is the game that these people are playing here. So this is why I think, whatever is happening between 1825 and 1821 is fishy. But anyway, if you're looking for buys, you do the same thing. But then you just be aware that I am looking for buys, but my daily bias is bearish. If you're fine with that, then go ahead. So here, if I was looking for buys, I would do the same thing. Mark this as a double SAR, and of course, change that color to green. Mark this other thing as a double SAR. So even with the green SARs on the 30-minute, I don't see any buy for US 30 on the 30-minute. On the 15-minute, you have a lot. Again, there's something weird happening here. But so in this instance where you have a lot, I would say focus on the cluster. So as much as this is a small zone, 1825 to 1821, focus, you see this cluster right here is so close together. So then I would say focus on the cluster if you're in a zone that has a lot of SARs together. I can see another cluster here, this double. So in this instance, you just wait for a break and continuation or test and rejection. So in this instance, you had, depending on if you're trading before, I don't know when you'd be trading. So here you had this break continuation. So let me mark up the buys that could have been taken if you're taking. But again, for me, I wouldn't be taking any buys for gold. Or I wasn't looking to take.
Yeah, like yesterday, like was it in the night? No, not in the night. 12 or like in the night. Yeah. So in the night. Or after around like is it 12 or 1 a.m. There was I think on the 15-minute. No, was it on the hourly? I think it was on the hourly. There was a break in continuation for gold.
Yeah.
So
Yeah,
if
I
you
mean,
trade
if it went, I wouldn't. If you ask me, I would not. Again, I do not advise you guys to trade against the daily. So here, for example, good example here. This was a break and continuation at 6:15 a.m. You enter in on impulse, as much as not on impulse, on the closure because the trade is already valid. As much as your stop loss is way below the SARs you're trading, you get stopped out. Even though you waited for the 1 minute in this SAR zone, there's no way you'd have survived this buy right here. Then you go ahead and wait for another buy of the same zones. This is a break. This is a continuation entry. So this current one that's running, this is an entry right here. So for me, huh?
Isn't it too far? Like,
yeah, it's too far, right? So in this instance, then you ask yourself, are you willing to, so your SARs would have still, your stop loss would have still been below the SAR zone you're trading. However, it's like 80%. So of course, yeah, it's too far. For me, I'm the kind of trader, if I was looking to buy, I would wait there. But so here's the idea. Here's the thing. You don't have to, if it's confusing, and I'm not saying it's confusing for you, but for me, here's the idea. Here's the reason why I don't care that gold is pushing up for me. I'm still bearish. Okay, so I changed this to bearish. It doesn't mean that at every candle you'll be selling gold. Okay, let me put, I don't want to lose those zones I had before. Those sell zones. Where are my red candles there? I don't. Okay. Give me 1 second. Okay, I didn't want to lose my zones. So I don't care that gold is pushing up. Guess what? Look at where gold is coming to on the 1 hour. On the 1 hour, yes, I don't have any double SCR. Even though gold goes to 1875 right now, that's perfect for me. I have a sell zone in 1875. That's the purpose of the SARs. The SARs, the purpose for them is to tell you, first of all, find something to either sell or buy only. That's it. So long as you have that, I will give you entries. As much as your bias can be to sell, it doesn't mean that if price goes up, I don't have a sell entry for you. So here on the 1 hour, gold can keep pumping up for me. I'm done for the day. I've already taken my trades. On the 1 hour, SCR is telling me I have a sell zone for you at 1875, 1873. On the 4 hour, I have a sell zone for you. That would be all the way at 1910, 1920. Okay, that's fine. Maybe I don't want to wait. I tell the SAR, I don't want to wait for the 1875. SAR tells me, okay, go down to the 30-minute. What do you see on the 30-minute? On the 30-minute, I have a zone for you, again, 1868, 1868 area. For 15 minutes, okay, do you have any zones for me? I can see a zone here 1843. No, this is too big of a zone. It's more than 10 pips. Okay, 15 minutes is telling me the zone I have for you is 1864 area. Then you know what I'll do? I'll move to US 30. If I cannot trade for gold, if I cannot trade gold until 1875, then guess what? I just leave it. Also, but if gold is going to go to 1875, guess what? On the daily time frame, we're probably going to form a live buy SAR, and then I shift. So maybe for me, I'm not the correct person to ask. Like if for me, if my bias is bearish, I'm not gonna look for buys. Like that is it. It's just it for me. But if you can find a way, I'm not saying it's not possible. It is definitely possible. But in my experience, somebody who looks for both buys and sells, especially if you still haven't mastered the whole strategy by itself at first, is going to get burnt in the markets. So for me, if I'm telling you my daily bias is bearish, I don't know about the buys. I do not know. The only time I'll switch my charts to buys only is when I get the daily right here. Because if you think about it, there's no reason, unless you're immensely profitable trading both ways. For me, I'm not immense. Every time I've tried to trade both buys and sells, I am not a profitable trader. But, you know, looking here on the daily, let's go on a bigger chart. If I go on gold right here on the daily time frame, and just focusing on the SARs by themselves. Let me even turn off this buy and sell signals here. Focusing on the SARs only by themselves. Let me ask, you know, let's go back to God knows how long. Let's start here. January 2nd, 2022. So anytime an SAR closes above a bullish zone, you buy. Anytime it closes above a sell SAR, you sell. Okay, so here, at this instance, it closed above. So if I was trading with you guys here in January 2022, I would be looking for buys this whole time. Now, remember, same thing I just showed you. It doesn't mean that gold is supposed to keep buying all the way up here. In this day, when I turned my bias from, I guess, the previous, actually, it would still have been bullish because the last closure, even before this day, because he didn't close below this sell SAR, it was still bullish. So this whole time from this, because remember, you're looking at the recent closure. So this whole time it closed my charts, I'll just be looking for buys this whole time. So here, I know we created a sell SAR. Did a daily candle close below this sell SAR? No, I keep buying. I'm still making money with buys only. Keep buying this whole time. Okay, this time that it closed below, I have a sell bias. It doesn't mean that gold was supposed to keep selling. It meant that if I turned on my SARs on the hourly, on the 4 hour, when this closed here, I could have had some sell zones even up here. So this whole time I would have been selling. Okay, when the daily closure closes above here, guess what I just do? I close all my sells, or I stop looking for sells. I just start buying. So I would have ridden this whole buy since February 2022 all the way to the next time it closed below was March. For a whole month, I would have been riding this whole buys. That is the ideology. So that is why for me, if I'm looking for buys, because if you backtest this, remember, and this is not, it doesn't repaint or anything. This is formed live, you know, there and then. So if historically I can see the power of doing buys only or sells only, why would I be trying to do both buys and sells? You know, it's as simple as that. Now, I'm not saying it's not possible. I'm just saying it depends on how your psychology is. For me, my psychology is that if I do both buys and sells, I will be, you know, I'll just mess myself up. If you're the kind of person to do both and it works for you, then nothing changes. The same thing you'd look for when looking for sales is the same thing there's no strategy for sales only, there's no strategy for buys only. The same thing you would look for while looking for a buy is the same thing you'd look for while looking for a sell. So nothing really changes. So if you ask me, you know, the buys that are there, then if you're looking to buy, it's the same thing, test and rejection, break and continuation of anything that's a double SAR.
Yeah, you know the break and the test candle. You know those two candles. You know what's a little confusing is, you know the wicks and the body, right? What's the difference?
But you're looking for the closure. You're not looking for the wick. It's always the candles. Where are the candles closing?
Oh, so you're meant to look at the body, right?
well, depending on what direction you're going, yeah, you're looking at the body. The key thing, I mean, I don't know how to put this better.
Because I keep looking at the wick, so I thought the wick.
No. Look, and if you again here, so also go to, so I do the weekly recaps, right? Every week. So go to YouTube. If you don't want to rewatch the live sessions, right? Watch the recaps that I do for the trades that we took. For the trades that we took right here, if you go to videos, and they're going to be named differently, right? The week of this and this, the week of this and this. So I go over all of the entries that we took. You know, I go over the break and continuation, the test and rejection. Watch this. They're much shorter than the live sessions. You know, a good amount of them are 20 minutes, 30 minutes. Use this. Don't look at the wicks, because remember, you're looking for, I don't know, I don't know, again, probably try and rewatch them, or don't look at the wicks. Look at where the candles are closing, because you can have your break candle close below your zone, and then the continuation candle reverse and close opposite. Again, it depends on how. This is why I don't like thinking of both buys and sells.
I know what you're saying. You're basically saying, so the first candle, the break or the test candle, should close wherever. So if the test candle is closing, let's say we're looking for sells, the test candle should close as bearish, and the break candle.
No. Here, EU, another example here. It's forget about bearish and bullish candle. Where, look at your zone. So here, we had this sell zone on EU. So do you see this triple sell SAR? 1, 2, 3. Do you see that?
Yeah.
So, okay. So the test candle, you need the test candle to test it. In this instance, if I'm selling this way, I don't need either, and I'm looking for a test and rejection entry. Neither the test candle or the rejection candle should close anywhere above or in between those lines. That is, again, this is why I'm saying it depends on whether you're looking for buys or sells, or whether you're looking for test and rejection, but it's the same mentality. So here, if I'm looking for sells, I've already identified my sell zone. If it's a test and rejection entry, neither the test candle nor the rejection candle should close anywhere above this zone. So it shouldn't close above this bottom SAR. It shouldn't close above in between this SAR. It shouldn't close above here. Both the test and rejection candles should close below this zone. So remember, the SAR is a whole zone. The whole, right, that SAR you've marked up, it has an upper limit and bottom limit. So you want those candles in this instance to have closed below that zone. So if I replay, so forget about the bodies. It doesn't matter whether the body goes all the way up there. The key thing is, where does the body close? Here, what is this candle? Has it tested your zone? Has it closed below? Yes. That is that is a valid test candle. Now let's assume this hourly candle. So this is the same mentality on the 15-minute or 30-minute. Is the same logic. It doesn't change. Let's assume this candle closed even above this bottom SAR right here. That trade would be invalid for me, unless now I want to consider my zone, instead of a triple SAR, to be a double, like just, let me redo this. If it closed above the bottom one, maybe then I can change and say, okay, I'm considering this a double SAR and not a triple SAR. But because for me, I was considering it a triple, right? I just need the test candle to close between this one, below this bottom SAR. Okay, so then my test candle has already been formed. Okay, what am I waiting for next? The rejection candle. The rejection candle is the next candle. So I need the rejection candle to also, same thing, do the same thing as the test candle. I need the rejection candle. If the rejection candle closes above this bottom SAR, it's done. The trade is invalid. So what did the next candle do? The next candle, you see the wick. So if you're looking at the wick here, according to you, this trade would be invalid. Look at whether it closed literally below that. So you go ahead and enter that trade. At this point, you don't have to go to the 1 minute or 5 minute timeframes, because the trade is already valid. Now here.
So that wick that you just showed, that wick. So that wick broke that zone. So you don't look at that. You just look at where it closed.
What is it called? It's called test and rejection. So in any case, this shows you more rejection than anything. So for me, this is remember, the rejection candle is not always going to test or to come back to the zone again and reject. Remember, for every strategy, there's an A plus. You can have an A plus setup for a test and rejection. You can have a C setup for a test and rejection. The ideal entry is for the rejection candle to go in that zone and try and close above it, but the sellers or the buyers force the trade to be validated based on the SARs. So to me, this is more than, this is A plus entry, because the entries next to the SARs. B, the rejection candle actually got rejected from that zone. So that is where the test, and if you guys want me to change how I call them, sure. But the rejection candle, remember, so let's assume this current candle, the one that you see with the long wick, did not try and break up. Let's say it went straight down and became a bearish candle. It would still have become a test and rejection entry. But remember, the rejection candle does not always have to reject from that zone. It's just the way I name. The key thing is those two consecutive candles. So think of the break, and so for me, I don't even look at the rejection. Like, I just know break and continuation means two consecutive candles. The key thing, the major thing that starts off, so forget about even the second candle. The major thing that you should start looking at is the first candle, is either the break candle or the rejection candle. So because the rejection candle or the continuation candle, the only thing they have to do is follow where the previous candle closed at. So in this instance, you had already gotten the test. So you knew your test has been validated. So all you are waiting for is the next consecutive candle to close below this zone. Whether it went up and tested it or whether it just became a bearish candle, if this candle with a wick started off bearish and closed here, the entry would have still been valid.
Oh, so the candle has to close below or above the zone.
Yes, so that's it. So both candles, right? Yeah. So so forget about the wick. So the candle closures. So those two candles, they have to close. That's it. It doesn't matter whether the wick was like 100 pips long. And then in any case, and this is why I also mark up these things for you. I ask you guys, what do you know? Always ask yourself, what are the wicks telling you? The wicks will always tell you a story. Here it's telling you that in this sell SAR zone, there's sellers that are holding the market down. So that's also an additional confluence. Yeah, but always focus on where did these candles close. Let the wicks just act as a confluence and tell you sellers push the market down here, buyers push the market up here.
Oh, and you know the where the double is, and what's the third line? You know the third one.
Which one?
That one, yeah.
No, so here again, it's all relative. You could have, I just say, you could have considered this a triple SAR zone. You could have considered it a double SAR zone here. You could have considered this a double SAR zone here, right?
Oh, so you know the 10 pip, when you say the 10 pip zone. So when you say the 10 pip zone, the double SAR, the two at the bottom.
So for me, I considered it a triple because the zone, this is 0.2 pips. This is 55.99, 55.49. That's 0.5 pips. So it's way lower than my 10 pip zone. So for me, I considered it a triple. But if considering it a triple would have been a 15 pip zone, guess what? I've considered it a double here or a double there. So I only considered it a triple because the distance between the upper and the lower SARs was only 0.5 pips. So that's fine.
Oh, so 10 pips for gold and FX is what you're looking for. So let's say it goes to 15. Let's say 15 pips. Would that be?
I wouldn't. No. That's why you have the rules. It has to be 10 and under for FX pairs. It has to be at most 20 for US 30. That's it. If anything is above, even by 1 pip, no. Like, it's just no.
So for gold, for US 30, it has to be 20.
No, 20 or less.
Or 20 or less. The zone, right?
Yeah. For gold and FX pairs, it has to be 10 or less. Or think of it at most 10 for gold and FX pairs, at most 20 for US 30.
Oh, so 20 for US 30 or below. And for gold, it's 10 and anything below.
Yes, correct. So maximum 20, maximum 10.
Yeah, and what's it called? You know, with like the Bitcoin, are you using the SAR?
No, I haven't started. I need to backtest it. I don't know. Yeah, Bitcoin is different. It's a different beast, but yeah, I haven't backtested that.
What about when you were talking about GPP NZD with this SAR, do you think it's better to just use the SAR than the reversal? Because with the reversal, like imagine with gold since last week Tuesday, if you had anyone that was using the reversal, you would have got stopped out. How many times? Maybe, let's see, you would have got stopped out maybe 4 times.
So stick to what, for me, stick to your daily bias. If always have a daily bias, you don't have to use my SAR daily bias, have a daily bias. That will save you a lot. So if you were using, I'm literally using the reversal indicator right now on all my charts. If I was using the reversal indicator, I could have been selling this whole sales right here. So it doesn't mean that, remember, the reversal, if you think about it, reversal is also beginning of a new trend. So it doesn't mean when you're talking something is reversing, it also means a new trend is starting. So if I was using the reversal indicator now, I wouldn't be looking for buys. I would be looking for sells on the reversal indicator. So it doesn't mean that since the trend is bearish that you use for me, okay, ask yourself, always have a daily, okay, in short, let me summarize it this way. Always have a daily bias. Because if your daily bias is bullish, why are you looking for buys on, or if your daily bias is bearish, why are you looking for buys on gold? That is where it comes in. Know that if the daily bias is bearish and you look for buys and you take a buy and you get stopped out or blow your account, do not get mad at yourself. For me, I know I'll get mad at myself. So for me, I know I'm not out here trying to risk it. Like I found something that works for me which is why for me, I find it hard to answer questions when it goes against my daily bias, because it just affects me using my psychology. So with all the tools that we have, find one strategy. You don't even have to use the SAR. If the reversal works for you, I'm pretty sure there were some entries that you could have gotten for a buy or something.
Maybe that one. That's it. Because the rest of it, you would have just got stopped out. The SAR, look at how many entries you would get.
So that's the key.
You wouldn't have got
key right there.
Yeah.
So find that one, stick to it, and forget about the others. You guys don't see me. I don't trade the crosses anymore. I mean, they're still profitable, but I don't trade but if I were to trade the crosses, because before, when I released the crosses indicator, we didn't have the SAR. I didn't have the daily bias. I was trading either buys or both buys and sells. But right now, if I were to go back and trade the crosses indicator, guess what? If there's a buy and my daily bias is bearish, I would not take that buy. But if there's a sell and my daily bias is bearish, I would take that sell. So if, let's say, I were to go back to trading the crosses, but right now I have no need to go back and trade the crosses, because what I'm doing with the SARs is giving me fewer entries and more profitable entries. I just showed you guys on the live session right now, I was risking 1.5% for 2 trades. So that's a combined 3%. So that is way more profitable than I was even while trading this ones. So it just depends on what you know. But all I'm saying is that find a daily bias. Find a daily bias. Let that be your compass. Let that be your director to say that today, hey, do not even look for buys, look for sells. Doesn't mean that you won't find some buying momentum, but that buying momentum might be coming to tap you into your sell zones. Right.
Let's see. And with do you think you're gonna test Bitcoin on it?
I'll test it, but Bitcoin, the effort I've put in testing something for Bitcoin has not been worth it. So if we're profitable doing US30 and gold, but if I do get some downtime, I'll test Bitcoin. The only issue with Bitcoin is how it moves. And unless you have like $1,000 stop loss and $2,000 TP, I think maybe that's the only way. In the past, I've gotten away with a $500 stop loss and $1,000 TP. But even for that, you have some manipulation. But that was before I found the SAR. So I'll test Bitcoin going forward.
Because like like Saturday, Sunday. You could just trade it then, isn't it?
No, I don't trade Saturday, Sunday. I'm
No,
done.
you know, Bitcoin. I'm sure. It's 7 days a week, isn't it?
Yeah, but I'm just saying personally, I don't trade Saturday or Sunday. So I'm not going to back test it. There's an entry here on US30. I'm not going to test it so that I can. You don't have to trade every day. You know, you need a life too. So yeah. So if my motivation is to test it so that I can trade Saturday and Sunday, I'm going to be honest with you. I'm never going to test it then, because I have no need to trade over the weekend. Yeah.
No, I just meant like the EA would do it, not you.
Oh yeah. Oh, I see. Yeah. I see what you mean. Yep. I think I think I tested it in the past. Yeah. I see what you mean. Yeah.
Yeah, of course you wouldn't trade. Like, what's the point? I'm just saying the EA just does it.
Okay. Yeah. But if you're using the EA, it's the same. So you wouldn't even need, if you're doing Bitcoin, you wouldn't need then those extended SARs, because you do what we're doing right here. You just look for the last closure.
FYI, advising that 30-minute sell on gold. Must have validated, because I had marked off. I don't know, maybe it was a 4-hour zone I marked off, but it rejected perfectly from it and spec dropping again.
Oh, the 1823 zone, or which one?
Yeah.
See, yeah, it's back at it. Let's see what I want to do. You know,
I have a zone right at 1830. I think it's on the 4-hour, might be a double saw, or the 1-hour might be a double saw that I marked off from a couple days back.
What chart are you using? Oh, it's because I'm using on. I see why it rejected from up here.
Is the hourly?
Huh?
It's on the hourly.
No, yeah, this is on the hourly.
I didn't realize I'm using 8 cap. I usually use an on-the, but I marked this one
8 cap.
8 cap. Yeah.
And you have what, a double?
Yeah, it was a double, like right around the
let me see,
1830 mark.
Okay, 1830. Wait, I don't see. I see a single one.
Yeah, you don't see on one.
No, even 8 cap. I see.
I had to zoom out because it was back.
Oh,
sometimes you show us you can look back.
Yeah.
It was a couple days ago again too, so it may be hard to find it now.
Oh, I see what you mean. Okay. Yeah, that makes sense.
I only do that on high time frames though, not the 15 and 30, but the 4-hour and 1 hour, I look back because they usually hold pretty good.
Oh, you know what? I'll go in because of Livy. But anyway, no, this one I'm only taking this trade because I'm up. Anyway, I think that will be it. Unless Invest, you have any other question? Let me put this back.
That should be it, bro.
But I'm expecting 1823. Yeah, because that 1823 as well. Did you take the trade up there, Livy?
I missed the very top, but I had that marked off. So once I seen it, it rejected, and then it looked like it went back up to test it, and then I took the trade there. So
so it must be heavily in profit then.
Yeah, it's at 600.
Good shit, man. Yeah, let me see. I might catch something here at 1823, but that will be after the live session. But anyway, good stuff, man. Good. Keep working. I'll catch you guys next week.